All right, now let's get to another conversation. Right now we have the consultant and Chief Executive Officer of Flame Academy and Consultant Limited, Mr. Oji Odemezue, joining us in the studio. Mr. Odemezue, we have a lot of things to discuss with you today. Good morning and welcome to the program.
Thank you for inviting me. It's always my pleasure.
Great. So I hope you have looked at the CBN PMI. What are your thoughts? We saw agriculture 53, we saw services, I think 51, and then we saw industry or vocation also looking good. At least we saw upward trend for most of our numbers, even though we have been warned that it's a moderate.
On the average level, the PMI dropped a little from 54.2 to 52.7 or so, which is not quite relevant, but it just reflects the fact that the global economy is still not very stable, with the tariff game still going on and hopefully being gradually resolved. We're hoping that the big players in that game, the US and China, and of course the EU zone, will begin to taper their temper, and let's begin to have peace in the global economic activities.
But I thought we had the impression that the tariff, the global trade war, has almost little impact on our economy.
No economy exists, on its own. And in Nigeria, where we know that a lot of things depend on importation, you find that, it's still a factor, all right? And of course, it affects our own domestic consumption. But when you look at the PMI index, it factors in all of those: the stability of the global market, the global business environment, the local consumer capacity, and so on. And of course, ability of businesses being able to decide on what to invest in, what to purchase, and to carry out the activities. Basically, business is all about purchasing assets and raw materials to enable them operate, and also being able to finance these activities. So once there is some uncertainty in the market, these things are affected, but the impact is not that much. We've seen a slight drop, even though some sectors, like I mentioned, have seen some uptick in purchasing activities. But generally, it's neither here nor there. It's not doing so well, and it's not doing badly all the same. Looking at the trend, beginning of the year, you find that it's been consistently going up gradually, just dropping a bit now, and we hope that by June, as we approach, H2, second half of the year, that because companies will begin to pursue their targets aggressively, and we may see more activity, of course, hoping that the tariff war will also have ended. I think the 90 days gap giving, we're coming towards the end of it. And
but that's just the pause. It looks like the war is just starting, because President Trump just talked about a new steel and aluminium and all of that.
Investors back to the US. All right, so
but anyway, it does seem like the tariff will not affect our domestic, our stock market.
We're not so.
In the month of May, we hit a new high. We crossed the 111,000 level. The market cap crossed to 70. The benchmark gained about 5.62% in the month, and we saw a lot of sectors, consumer goods especially, leading.
Yeah, the outlook for Nigeria is actually positive, and we hope that government will leverage on this to support the business environment and encourage more investment, inflow of investment, both foreign direct investment and domestic investment, so that we can see this economy go back to our growth level of above 6% GDP growth. We can achieve it. This economy can actually achieve double-digit GDP growth.
So in 2025?
No, I'm just saying, in the medium to near future, we have the capacity to do that. But we need leadership, both in the private sector and public sector, to enable us create the enabling environment to make this happen. We need to, ramp up a lot of infrastructural concerns, particularly energy. Energy is still a big concern. Nigeria at this stage and age cannot be grappling with 4,000 or 5,000 kilowatts or megawatts of electricity. We need to change that narrative. Go to Cameroon, go to Ghana, go to other African countries. You feel like you're in a developed economy. If you consider only electricity, you don't see NEPA off, NEPA in. We still talk about NEPA, by the way. The generating level is still low, distribution is low, and the way it's now being shared, band A, B, C, D. We don't need that if we can supply this to everyone in the country. So that's a singular, most important factor to ramping up our economic activity. You see the PMI jump up quickly. Of course, if we also deal with security at the same time. because these are things that slow down activity. If there's terrorism and low threat to the life of the farmers, the activity will also slow down. Purchasing capability will also slow down, and these things impact PMI. Imagine we agriculture is even seeing some growth in PMI right now. Imagine if everybody is so safe to move around, not just to go to their farm, but also carry farm produce around the country, because that's a major issue here. Being able to save them or put in silos and store them, and be able to do other activities. So there is hope for this economy, but we need to start or keep doing the right thing to ramp up this activity.
I'm talking about the market. Yesterday, we did have an impressive turnout by Oando. They announced strong full-year performance. They posted a 44% revenue growth to 4.1 trillion from 2.9 trillion. Profit after tax jumped. And then we were hearing a lot of news about Oando recently.
Yeah, yesterday.
The Afrexim Bank.
They led the list of the top gainers.
Yeah, they made
In fact,
the market
they gained
yesterday.
the highest band, 10%. Because the market cannot allow you to go beyond 10% in a day. So hopefully that trend may continue today. Oando is a story of evolution, a new evolution in the Nigerian oil and gas sector. They are now not just leading the trading aspect, that's the downstream sector. They have made a very gigantic move towards becoming a leader in the upstream sector. With, of course, we've discussed that here before, the acquisition of NAOC, Nigerian Agri Oil Company, that they concluded last year, a deal that was almost $1 billion. So for them, this is a time of sowing. They say that there's harvest time and there's sowing time. For Oando, this is a time of sowing seed. You can find that they're trying to gather all the capital they can to ramp up the use of the assets. You can't have assets, worth over 6 trillion and not be able to fund them. You can have big machines, big production plants, loading bay, kilometers of pipeline. You have to feed them with capacity. You have to feed them with, input to give you the highest return. So this is the time they are investing. In fact, investors, if they can see the future, this is where to position with Oando, and the future is so great for them because, with that acquisition, now you mentioned the Afrexim Bank loan upgrade. That's a loan that was about $400 or $500 million paid down by them, over the year to $100 million, and then increased again to almost $400 million, showing you that Afrexim Bank can see a lot of future and prospects Oando. So I'm hoping too that Nigerian banks, commercial banks, investment banks, that's what do you call them, merchant banks, and other lending institutions can see the opportunity here and come in. It's no more an oil and gas company belonging to the international board as IOC. It's now an LOC that is to upstream activity, and they are also building that reputation as Africa's foremost energy solution company in the upstream sector.
So with that, a lot of people watching here perhaps are not investors.
All right.
And so they'll be asking, so what's the need for me?
A whole lot in it for them. Last year they gave script issues of almost 120 billion naira worth. So that's a way of giving cash to investors. Even though that pushed their prices down because people wanted to take profit. But a future-looking investor should hold those stocks. At 51 naira yesterday.
About energy security and all of that, since they're in the oil and gas.
They are dealing with all of that. It's a concern in Nigeria everywhere, but you can see in the past 1 year plus there was stability. The River State brouhaha would have caused an uprising, but miraculously that didn't happen. So one of those concerns is, because they're also local, they know the environment. I've said it here before. So they know the environment, they know how to manage their assets all over the creeks and all the deep sea and the shallow water, investment they have. From Tebidaba to Brass and all of them, they monitor them regularly. And generally speaking, being our own people, we can talk to our people to, calm the security issues down. And the trading aspect also dealing with that. So if you look at the growth they have seen, both in their revenue, moving, as high as 4 trillion, total assets 6 trillion. And then if you look at now the details of their production, crude oil, because they're moving gradually from being a trading-focused oil company now to crude oil production focused. At an average of 6,000 to 7,000 barrels of oil per day, now moving towards 100,000 in the next 4 to 5 years. From their own prediction, 2029, you find that the amount of revenue, we can't be talking about 4 trillion, we're talking about tens of trillions in revenue. And for an investor looking at the future, If you take a position right now, I'm just, even myself, I'm talking to myself too, it's time to invest in there and then
what
calm
about
down.
Other players?
Just be coming down, look at the future.
Mr. Demezo, let's talk about other players also in the oil and gas sector. We see Aradel also, but I don't know, I don't think they didn't move that much last month.
What moves a market, Aradel, Seplat, and the rest of them, is activity. Every movement you see in the market is based on the news you are seeing in that company. So maybe they're still coming up with their own acquisitions and processes. I'm sure that those ones will also move when we see the step they have taken, to innovate and they take over some of the assets. Oando is only very much in the news now because they have concluded their own acquisition. And beyond concluding it, they have now, in that result you saw for last year, it delayed a little because they were trying to obey the IFRS system to integrate the acquisition. Even though the acquisition of NAOC has just played a little part in that result. By now, by 2025, when they have a full impact and more production going on, resolving their trading issues, you see that there is future for an investor in Oando. I believe that if banks can support them as they are trying to ramp up capital to fully utilize the asset they acquired, and then maybe banks support them with their own loans, you see that this is time to position. When it looks a bit risky because they're just starting introduction into that upstream business. Business cycle start with introduction, then growth. So people who come in now are going to position for the growth and will most likely see in the near future. And for me, as an investor, I'm also looking seriously on that stuff. Not to buy and speculate, but to buy and keep and watch them grow. They are just coming out of that innovative process that they've taken. And once they apply good management, strategic management, and apply efficiency, not like in a public sector business, once they apply efficiency, there is no way Oando can go except up.
Mr. Demezo, I mean, this is not a channel
this
television.
This is my view.
This is Mr. Demezo's view.
As an analyst,
talking about this.
Yeah.
Exactly. So let's look at
once the company applies efficiency in because the assets, I bought to those assets. I did my youth service in Egypt far back in 1997.
Oh, so you're sentimentally attached, no wonder. Let's talk about the consumer goods. They did so well last month. What were the drivers and what can we expect this month? Consumer goods sector, yes.
Okay, right. The fast moving consumer goods sector.
Nestle has already started surging even this month.
Yeah, it's a sector that depends on how healthy the economy is. We all consume their products, whether it's detergents or maybe what do you call them again, creams and all of those things that we use, food items,
edibles.
Edibles and so on. They are in daily consumption. So once people are coming a bit out of poverty and begin to do better, employment is ramping up, jobs are being created, people consume. So somehow we expect that the economy will start getting better. We have stayed in this low, fragile growth for a long time. Nigeria has the capacity to start booming economically, actually. So once that is done, you see the fast-moving consumer goods are going to be, they're always a good deal. All right, so I expect that it's going to get better, with time. And of course, schools are on. Usually when schools are about to, open, it will also ramp up activity. Children are buying all kinds of things, biscuits and all of that. So it's always a good, their sales are not seasonal, by the way. It's almost, always impressive all year round. So it's a good sector, and I expect that they should be able to ramp up the activities. Okay,
what's your expectation for the market this month? We hit new high, we've sustained it, even gone beyond. I mean, we did 111 last month.
Yeah, all share index. Nigerian stock exchange, stock market or Nigerian Exchange Limited is a very well-run platform, very transparent. And once people are able to invest and see the benefit, they stay in there. So I expect that the market will continue to, grow. Albeit maybe not very fast, but gradually it's growing, and I expect that growth will be sustained. Nigeria is a big market, even though we're struggling with our position in Africa and the GDP size, but it's always a place to invest in. There's a whole lot to still get out of here. Foreign investors are still coming in, though not as much as we want them to come because of security concerns. So I still plead with the government to clear those security concerns. Agriculture, investment in local communities and so on needs to be ramped up. Kidnapping should be dealt with. These, what we call herdsmen concerns should be dealt with, even though I think they are coming down gradually. But it should be held down properly. So this country will get the benefit of, the renewed hope agenda that we have. So truly, this economy has no reason to be struggling with growth. We have all it takes.
And we need more companies on the NGX.
We need more companies to come in.
Yes,
and to be quoted, of course.
Yes, to be quoted. On the NGX.
There's a listing requirement which some of them should be able to meet. But you know, they're still trying to do big boy or stick to their own foreign market. But this is a market that any good company should come in to raise equity, you know, and of course to be able to share goodness to the company and then raise the kind of capital they need to, you know, keep the activities high. To be committed to the economy. You don't just come in, do your own thing without being in the market.
From the economy.
Our market can be much, much deeper as it is now.
Yes.
And the deeper the market cap is, the more investors can come into it. No major foreign investor wants to go into a shallow market.
Yeah, and I think JP Morgan says, I mean, for Nigeria and most emerging economies, our hope should be in our debt market.
The debt market, you know, bond market.
Yes.
And of course, the FMDQ, I must praise them. They are doing so well too. Many companies are able to raise, you know, funds through the market, commercial papers, and bank acceptances, and such other instruments. So, you know, it's more like trying to compete with even government, because government trying to handle our inflation concerns at tightening rates, people tend to move their money into the money market. But with these avenues to issue commercial, even banks are beginning now to raise commercial papers. Hopefully, maybe to manage the cost of funds due to high CRR and other regulatory requirements like equity ratio and so on. So Nigerian market is actually bubbling, it's getting up there. Bond markets are growing, corporate bonds, and you know, treasury bonds and so on. So the only way for Nigeria to go is up there. Can we sustain, you know, the factors that make this market grow, particularly, like I said, security. And you know, of course, energy cost, so that Nigerian businesses can grow. You can't be borrowing money at almost 40% right now and be running your own energy production as a company. You have to produce your energy to run your factory. Yeah. For hotels, for hospitals, for manufacturers, it's crazy, the cost. And they are now competing only, you know, in a slow manner with their foreign counterpart. Any item that's brought in from China here should not be, you know, less costly, should not be cheaper than Nigerian product. But that's, today, it's difficult to now say, because local manufacturers are having it very tough. The other day, I listened to the chairman of the lady, who is the chairperson of the Lagos Chamber of Commerce, complaining about how the last MPC did not do anything about CRR, which is very high. So how much they get loans at, almost 40%. You now factor in your cost of production and so on, energy costs and so on, you find that you are struggling to make sales. Ideally, locally produced items are meant to be much, much cheaper. You know, so when you import something with all the tariffs, the local producer will sell first before you.
Yeah,
you know,
help you to
create employment here. Yeah. But the more we import unemployment. You are creating jobs for them in China, US, everywhere else, while people are here dying of hunger, not getting a good job to show for the school that they attended.
All right, Mr. Demezue, thank you so much for always bringing in that passion into conversations. Mr. Orji Demezue is the Chief Executive Officer of Flame Academy and Consulting Limited.
Always my pleasure.
Thank you for your time.
Do have a great day.
You too.
Right, thank you.
All right, let's take a break. When we come back, another conversation way to uniting the African financial operations and markets. We're taking it up from here. That's after the break. Please stay with us.